could you give me a quick overview of your results? And then is there anything in particular that stood out for you?
Thanks, Simone. Very happy to do so. So I would put the results in the context of what Kenmare has been doing for the last couple of years, which is to complete a number of development projects which will enable us to move to a production capacity of 1.2 million tonnes per annum of ilmenite plus co-products next year. And the objective of these projects is to allow us fully utilize the asset at Moma. So the results for the first half year have been stronger and more resilient than people might have expected, given the challenges that we're facing and that the rest of the mining industry has faced with the first half of the year with COVID-19. We returned an EBITDA of $37.2 million, which compares to 42.8 for the first half of last year. So down about 13%, but all in all, that's quite a strong performance. Our costs are a little bit up because we have had lower production in the first half of the year, but some of that has got to do with grade. Pricing in the market has increased on average by 13% for our products. So, all in all, the stronger pricing, continuing to produce and managing the costs has enabled us to generate this earnings, and that translates into a profit of $12.7 million, and that has enabled us to continue with our dividend policy of 20% of profit before tax. So quite a good set of results, I think, in the first half of the year.
Great, thank you. And then obviously, as discussed, question two sort of focuses on a more pandemic-specific angle. Your results say that the company's performance during the first half of the year demonstrated Kenmare's resilience and agility, especially in light of the COVID-19 pandemic, and that you managed to produce and ship your product safely. Could you speak to me on some of the measures your company took to ensure this continuing state of business in the middle of a pandemic? And has the pandemic impacted your outlook for the remainder of the year or even 2021?
Yeah. So look, yes, it has affected us as it has affected everybody else. And as we saw this emerging globally, we and the management team at site started to take measures pretty quickly. We locked down the site. And initially, we focused on prevention of COVID-19 coming to Moma and to the surrounding area. And that was successful. And what it enabled us to do is to put into place additional health protocols, embed social distancing, and get our testing procedures in place. So this access restriction to site recognized, I suppose, that at some stage it's going to get into the area, but by the time it came there, we were well set up. We had brought in additional housing, and now that COVID has come to Mozambique and has come to the area, we're much better off in the way that we're able to manage the situation, and it has not shut down the mine. Very conscious that many other jurisdictions have had national mine closures, and that hasn't been the case with Kenmare. So we're going to continue to do that. We're going to operate safely. We're going to, not just mind the welfare of our employees, but also the contractors who we have on site and the local community in which we operate. So we have supported the host communities by buying ventilators and CPAP machines, which are these breathing machines. And I think, all in all, whilst we have had some positive cases and they have been asymptomatic, it's been something that now we're well able to manage. And I would see the second half of the year being more of the same. To bolster, what we've done already, we have set up a testing facility at site. So everybody who comes into site is going to be able to be tested, and that will give us confidence that we're not bringing infection into the area, because we will have expatriates who come in and out. So again, I think a lot of this is about good preparation, attention to detail, and ensuring that everybody is conscious that safe operating practices is the right way to run the business, and so we're continuing that.
Yes, and then you declared an interim dividend this period following your maiden dividend in August last year. Could you just speak to me on this a bit, please?
Sure. So the background on this is that in October 2018, Kenmare had a capital markets day, and we announced at that stage that we were going to introduce a dividend policy, which essentially was 20% of profit before tax at a minimum. And we explained then that these capital projects that I touched on earlier would be completed through the course of the balance of 2018, 19 and 20. And in 2021, we'd be at a point where we'd be producing at full capacity and throwing off additional cash flow. So we've been sort of running with that 20% policy. The dividend that you asked me about is a straight 20% of profit before tax. That's 2.31 cents per kilowatt hour, and equates to about $2.5 million. So I see that as a step to larger returns to shareholders, which has been one of the foundation pillars that we put out there. And so I think that the performance in the first half of the year has enabled us to continue with that. But I see those numbers increasing in 2021.
Great, thank you. I mean, and then you also have a $106 million growth project that you're planning to relocate one of your mining plants later this quarter. Could you give me an update on the progress being made with this?
Sure. So that's the movement of one of our two larger plants. We have three mining plants in total. So this is Wet Concentrator Plant B, and it's moving about 22 kilometers south of its current location. And so we're well through that. We expect to start the move in the third quarter. We expect it to be completed in the fourth quarter. And then it will start mining in the high-grade Pilivili area. This is the third of three capital projects, and this is really the largest of them all. The total capital cost, which we have released, is $106 million, but we've also said that those costs will increase by about 10%, largely associated with additional measures that we've been taking relating to COVID-19. So people who come into site now will have to isolate in Maputo for about 9 days, and we've had to take a number of other measures that have resulted in cost increases. But the more important thing, I think, is that we're going to complete that project later this year. It's running well, and when we get into the Pilivili zone, the key benefit is that the grade in Pilivili is more than double what we're mining at the moment. So that increases the amount of heavy mineral concentrate we produce, and that's what feeds into the mineral separation plant and enables us to up our production. And in terms of why that is so beneficial, not only do we get additional product out, but most of our operating costs are relatively fixed. So you see in the first half of the year, when production is down a little bit, our cost per ton goes up. But as we move into 2021, the increased production will increase operating costs to some extent, but generally will drive them down, increasing our margins, increasing our turnover, and that's what drives the generation of the additional cash flow. So that's the plan. So we've a lot done, but more to do, and looking forward to getting the job finished.
Great, thank you. That's it for my set of questions. Is there anything that you would like to add or maybe specifically highlight for us?
No, I think you've focused on the key things. I think from my perspective, the principal objective now is to get WCPB moved safely and efficiently. And when that's done, we can settle down, and the company can have more options. So I'm looking forward to the next interview and being able to show you some photographs of that taking place.